Tom Lee just went on CNBC and gave his thoughts on the next 40 days. He talked about whether what just happened was a game changer with China and whether this is a bona fide breakout. We're going to talk about that along with some pretty big news from BlackRock here today. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this as soon as I make them. There's also a link to MargX underneath the video where you can start trading cryptocurrency. You can go long, you can go short. You can put in some low leverage longs if you don't want to be as aggressive, or you can break it down to a smaller time frame and start playing the triangles, start playing the channels, and you can use, like here, we've hit the same point 3 times in a row and bounced. So if you want to just use simple support and resistance, you can do this as well. So actually this one is awesome. You can see resistance here flipped into support all the way through here. So yeah, if you want to play this, if you want to go long the market, you can use the link underneath the video to MargX. They're doing a big airdrop there, so you can get some free tokens by using that link and signing up. But let's get over to Tom Lee.
It does take us to our talk of the tape. How much more can stocks rise? Let's ask Tom Lee. He's FundStrat's head of research and CNBC contributor, live with us once again at Post 9. Nice to see you.
Great to see you, Scott.
You know, since the Fed did their jumbo cut, the market really hasn't done all that much except for one day last Thursday. Why?
Well, you know, I think the Fed unleashed us on an easing cycle, and that's going to be positive. We know it's actually historically positive 3 months, 6 months out. But what stocks do in the next month is a bit of a coin flip, and I think that's what we're seeing because there's some repositioning that took place. And also we're now thinking about the 40 days into the election.
So does the fact that the election is but 40 days away sort of ruin the perfect scenario for stocks to get that post-Fed bump?
I think it delays it, just because, you know, in the conferences that I've been speaking at and seeing wealth managers and family offices, a lot don't want to commit capital until after Election Day. And I don't think it matters who wins. It's just they want to get that event behind them.
Oh, so you think we're going to have sort of a dash to the finish after Election Day is out of the way?
Yeah, and that's pretty typical. You know, in fact, in election years, the November, December rallies are pretty tremendous. And in fact, when markets are up more than 10% in the first half, you also get big rallies November, December, sort of choppy through September.
Do you think investors are sold on the idea that this economy is going to make it? It's going to make it through. The Fed's going to pull this off. Is any of what we've witnessed since Fed Day doubts about the bigger picture?
So far, so good. This Friday, we get core PCE, and hopefully that confirms inflation is no longer on the front burner. But I'd say one thing I've noticed is that the number of investors and professional money managers that think we're already in a recession is very high. And so I think the evidence just has to be better than expected, and I think those views shift back to soft landing.
When we've seen, you know, recently targets for the S&P, Brian Belsky, I keep bringing him up because he's the most recent to raise his target up to the highest now on the street. I've asked you about, you know, the market lately. You haven't sounded like you'd be raising your own target to a degree like that, would you?
You know, I think there is a lot of upside in the foreseeable future. Let's say 3-6 months out. But for someone to tactically say we need to pin a 6,000 target and then put money to work today, I think it's harder to make that case because valuations aren't on the cheaper end, and we've already had a fairly sizable move. So I'm not saying I'm like bearish right now, but to me, I'd have a lot more confidence saying 3-6 months out, things are attractive, especially things went like margin debt, right? It actually decreased in August, meaning investors have been deleveraging. Mm-hmm. It hasn't gone anywhere for the last 4 months at a time when markets are rising.
I guess my point would be it would have been better articulated to just say you don't sound as bullish as you usually are. Is that fair?
You know, yes, I'm bullish into year end, but I'm a little less confident about how markets behave into election day. And not that I think we're going to have a huge drawdown. If we do have a big drawdown, you know, I'd be buying that dip. But I also don't think we can make new highs and then see the market blast off after election day. So I'd rather sort of say things look a lot better after election day.
Can we make new highs if tech doesn't resume its leadership role anywhere close to the degree that it had?
As long as tech is a market perform, if tech actually declines, that's going to be hard for the rest of the S&P 500 to compensate. But what we've seen so far, including days like NVIDIA and Tesla recently, is that tech is actually holding its own, but other stocks are starting to show catalysts and signs of life.
Yeah. What about the broadening trade? I mean, look, you look at the Russell, your big call, of course. Week to date's down more than 1%. Really hasn't done much at all. I kept hearing, hey, you got to wait till the Fed cuts. Then you go into the Russell. I don't know. What do you think?
Well, Russell had a big week last week. It's some profit taking now. But I think that there's, this is what bottoms look like. I don't think bottoms are straight up. I know in 2021, energy was bottoming, and it was also very choppy, but eventually made not only new highs, but then basically had a blistering gain in 2020, in the year following. So I think that's a multi-year start for the Russell. It feels choppy, but we're still near all-time highs, and there's a big fundamental case to own small caps.
Some have made the case that there are a lot of areas of the market that are overcrowded at this point. So many different sectors have gone up a bunch. You look at industrials and utilities and other things that have traded near or at highs. Therefore, they find better value in bonds. What do you think?
I think a bond investor is buying a bond for a different reason than buying an equity. Because an equity gives you not only inflation protection and benefit from falling yields, but also capital appreciation and positive surprise. Bonds rarely give you positive surprise. I think a bond investor someone should have some income with some capital upside there, but there are so many good opportunities. And, the fact that China has started to actually perform better and potentially broken out, that's again a Brent signal, because that's been a big drag for the last few years.
Oh, how about that? Do you feel like the move that happened in China this week's a game changer on how we should view what, the potential turn in their economy means for the overall markets? I mean, we've seen certain stocks get a nice boost, some of the luxury goods companies, right? LVMH, Estee Lauder, et cetera.
And the gaming stocks.
What about in the bigger picture?
It's hard to tell what's a trading rally versus a bottom for China. I spent some time talking to Mark Newton, our technical strategist. He thinks this is a bona fide breakout, and it is coming on the heels of not only stimulus, but in the face of unrelenting bad news for China. So to me, a rally on bad news is a sign that maybe the worst is already priced into China, and that means it could rally for a while.
All right, let me know what you think about that down below in the comment section. Obviously, Tom Lee saying that next 40 days are going to be choppy, but there are a lot of people sitting with money on the sidelines looking to get in, and we've seen that before. Like, we see that in crypto right now too. We've been choppy for 6 months, 7 months now. Just today, though, we did get IBIT saving the day. We were going to have an outflow day because Fidelity had a large outflow, 33 million. ARKB had 47 million of outflows. And IBIT had a big day with $184 million of inflows. I mean, that is large. Even when you subtract these days, it's still $100+ million day, again, for the Bitcoin ETFs. Now, of course, Tom Lee can't see the future, but he has been pretty right on with the market rallying. He's ultra bullish. I think you have to look past the next 40 days. You can't just be investing assuming that you're going to make some big move in the next 40 days and it's going to be correct. I think if you pull out of this market, you're leaving a lot on the table. Now, if you put everything into the market and you have no cash to, you might lose your head if we do have some kind of dip. Let me know your thought on this underneath the video. I think oftentimes investing is a bit of a tightrope walk, or walking on the fence, trying to make sure you have enough cash on one side, but also making sure you're exposed enough to the market on the other. If you do want to trade crypto, you can get access to leverage, which gives you access to more money. There's a link to Margex underneath the video. Thank you so much for watching. I appreciate it. I'll see you all in the next video.